Hello, so on this video we're going to talk all about stochastic, the stochastic indicator. So we're going to look into the introduction to stochastic, the components to stochastics, the calculations and interpretations to stochastic, the practical applications in Forex trading, advantages of the stochastic indicator, and its limitations and tips for effective use. So we're going to dive deeper into what and how to use a stochastic, the components of a stochastic, the uses of a stochastic, and advanced strategies on how you can implement a stochastic plus a moving average. So what is a stochastic? Stochastic is an oscillator or indicator used to measure the momentum of current price data. It's as simple as this. It's a momentum indicator. So it means it gives you a certain value of strength of the price in the market. Now, the components of the stochastics are the percentage K and the percentage D. And the percentage K is on the graph as a blue line, and the percentage D, which is the common default by 3, is on the graph as a red or orange line. So what are the uses of a stochastic? Now, it helps you identify the overbought areas which are over 80% and the oversold areas or zones which are below 20% in the market. So we're going to go more into how to use a stochastic. Here we are looking at an EU or Euro USD graph in a 4-hour time frame, and I'm going to show you how to use this stochastic indicator to trade. So as you can see, I have highlighted in a circle the highest area on the chart in the price data, and then you can see on the indicator as well, I have highlighted the area on the price data as well. And in the green area, you can see the price is above 80%. So like I said, when it's above 80%, it means overbought. So you'll be looking for a sell. And if it's below 20%, it means oversold. It means you'll be looking for a buy. So it's very simple. Like I've explained before, you sell at a premium and you buy at a discount. The stochastic is a perfect indicator for the premium and discount. So when it goes up to its highest, which is overbought area, you sell. And when it goes to its lowest, which is the discount, which is oversold area, you buy. So as you can see, we are on the highest area on the price data, and the stochastic indicator shows is way above 80%, which is on its highest, which is its premium. And then you'll be looking for a sell. And you can see the market crosses the percentage K crosses with the percentage D, and then it falls down to over 20, less than 20%, which is the oversold area. Now, again, we're looking deeper into the buy bias, into the stochastic indicator. So as you can see, the price is on an uptrend, and then you can see the price reacts and it's going towards the up direction. And in the stochastic indicator, you can see it's below 20%, which is definitely an oversold area. It means that when it's oversold, means it comes to its discounts, buyers will come into the market, pushing the price upwards. So you're looking to buy at 20%, lower than 20%, and looking to sell at over 80%. It's very simple, right? This is just how the indicator works. So a deeper push into how to use a stochastic indicator, because definitely you wouldn't just want to use a stochastic indicator like that. You have to go into an advanced way. So you have to put in your moving average, like I have explained in other classes of envelopes of the moving average, and so on and so forth. You need to put in this indicator. You need to put in your indicator. And right here in my 4 hours chart, I'm using a 200 indicator. So I have applied my 200 indicator for identifying my trend. So as you can see, we're previously in a downtrend and then we had a push into an uptrend. And I explained to you how you can use moving average to identify the trend. So if you haven't, or you're a bit lost in identifying trends with moving average, please watch my moving average class to understand how to identify trends with a moving or in a moving average. So you can see we have changed from a sell bias to a buy bias in the with the moving average, because the moving average is way above the line, because the price is way above the moving average and has found support in the moving average. So we can see that, and then you can see it's a buy area because it's found support, so it's a buy area. And if you come to the stochastic, you can see we are in the oversold area. So if we're in the oversold area, it means we're in the discount. And if we're in the discount, you'll be looking for a buy bias. Do you get it? You see how simple it is? So we have the moving average, how to get into a trade. You need to get a confirmation. So you have to find the trend. So we are in an uptrend. And then you use the moving average to locate the support, so we can see the price is hitting on top, just lying on the moving average to mark our support, so we know the support is holding. And then you look at your stochastic. Now you can look at your stochastic. Then when you look at your stochastic, you can see we're in an oversold zone. It means that the seller's bias is done. So they cannot push the market any further because it's below 20%. So it means that it's in the oversold zone. So means buyers will be coming in anytime now. So then you look at the moving average again to get your confirmation, like I explained before. And when it comes again to the support, then you take a buy. This is it. Simple as that. And then we're looking at a downtrend with the same moving average. The moving average helps you identify the trends. So you can see we are clearly in a downtrend. You don't have to draw the zigzag lines like I explained to you in the trend class. These are usually for beginners. More advanced and intermediate traders just use the trend line. They use the moving average to identify these trends, so they don't have to make their lines all messy or crowded. So as an advanced trader or a perfect trader, you need to find a way to limit the amount of lines and indicators on your screen so you can have clarity. So back to it. So here we can see the price is below the moving average line. So we can tell we are in a downtrend. So if we are in a downtrend, what would you be looking for? A sell. Now, why would you take the sell? Why would you take the sell? You take the sell when it comes to the moving average and finds a resistance. What is a resistance? A resistance, it's a boundary, it's a bridge, it's a barrier. It means you're pushing down on something. A support means you're lifting up on something. So when it comes to the line and it rejects it, you can tell that this is a first confirmation of a sell bias. And then when you go to the stochastic for a second confirmation, you can see it is above the 80%, which is the overbought zone. It means that it's been overbought. It's been bought more than it should. So what is going to come after that? A sell, because no one wants to buy further. So when you see you're in an 80% zone, and then you look and see that the percentage K crosses the percentage D downwards, you can know that it is time to take your sell. So you get your entry position and you ride the wave, and you ride it till you get to whatever profit, or 1-to-2 ratio, or 1-to-3 ratio, or 1-to-5 ratio. It all depends on your trading strategy. So how to set up a stochastic? So you just go, it's when you have your US, like here we can see the US JPY data price market. You just click on the indicator. When you click on the indicator, like other classes I talked about, the moving average conversion divergence, which is the MACD, the moving average envelopes, the moving average exponentials, and the stochastic. You can see it, you can favorite it, so you don't have to look for it, because a lot of people like to try different indicators. So it helps you just, be able to find the ones which you love the most, like your favorite. So you favorite it, and when you click on it, it just pops up. it just automatically pops up. You don't need to stress yourself about it. You don't need to go further about it. You don't need to stress yourself in any way about it. So you just go about it. And you have it. Automatically, the stochastic indicator pops up. And then if you want to look into the settings, you can just go down to the stochastic indicator area, and then you see the settings and you click on it. And when you click on it, it shows you more about it, the K, the suiting area, the default area, and the percentage D, and so on and so forth. But usually this trading view has already set it up for each time frame or each time zone. So it's usually more advisable to not mess it up and just leave it to function as it is. So I'll see you in the next class.